we're going back to some information we covered in a previous class. We all took an audit seminar in the fall, and we're going to be going more in depth in the verbal protocol analysis. Specifically, we're going to be explaining a project that you are actually going to be working on during the next couple of weeks for us. This will help us with the project getting it done. You'll get actual experience with verbal protocol analysis and what it entails and why it's complex and why there's not a lot of literature on this because of the nature of it. So basically, just to recapture what we discussed last semester, it basically involves capturing individual spoken thoughts while they're working on a task. Now, it could be, in the literature, there are some that occurs like simultaneously when they're doing the task, or it could be captured as a retrospective memory of how they did the task. Like one of the protocols that we ciphered was actually historical, and they were recalling what they did, and then the other ones were actually were analyzing the statements for risk analysis and risk assessment. So they're basically recorded verbatim. So we recorded the person talking their thoughts of how they come upon decisions or why they make their certain actions. And it's basically a stream of consciousness. And the idea is that people feel comfortable talking about what they think or like what they're analyzing. So it's almost like you're just talking aloud, like a lot of us do that. So it's more formalized. And basically then these thoughts are then recorded, and then they're coded according to the thought types they are, whether it's declarative, decision-making, just like a adjunctive sentence, whatever. So these are all basically categorized, and then they're used for further analysis. So basically the information, there's a lot of information this way about how people make decisions and how they come across understandings. And it reveals aspects of thinking and learning that you don't normally associate. Except you just see someone doing actions. Well, how do they arrive at those actions? So it helps us understand the reasoning behind certain processes and decisions. And also reveals changes in the task processes as they occur. Now, the limitations are, of course, that people tend to self-censor themselves sometimes when they're verbalizing what they're doing. They're afraid they might sound embarrassing, or they may make mistakes, and they may try to censor their thoughts.
Well, that's because we're standing in front of them,
right.
Sitting in front of them. So normally, if you're in the bathroom talking to yourself, or
right.
in the kitchen talking to yourself, you're not censoring your thoughts. But if you have Denise in the kitchen with you, or God forbid,
you better get it right, or I'm going to beat you up, right?
Then you're going to censor your thoughts. Right?
Yeah, exactly.
So that's why individuals are.
Well, I'm going to tell my husband that because he just mutters whatever he wants to all day real long, But anyway, so some people are really good natural self-talkers, and others aren't. So, for those who are more introspective and less extroverted, this is a difficult assignment to sit there and talk about your thoughts as you do things. So that's the limitation, is that people self-edit, or they may never notice that they're making certain decisions. Or sometimes what happens is people recognize they make decisions and realize, oh my goodness, why am I doing it this way? Let me correct that. So there are some self-presentation issues, but the biggest problem, and I say that with a quotation mark because it's all a matter of perspective, is that it's labor intensive. And Abdullah will explain to you how it's right for the researcher, not for the person just cognating about what they're doing, but for the person that's actually doing the research, it's very labor intensive. So here's Abdullah to talk about the nature of our project.
Okay, so we have a couple of interviews with audit partners and managers. So we basically had professors were asking them certain questions. There weren't questions.
What we did was Nicholas and I went to the firm, and we met with partner and managers, and what we asked them to do is to just go through the process that they normally go through when they're assessing risk, so the audit planning process. So when they're trying to determine the nature, timing, and extent of the test that they're going to perform, what are the judgments that go into that? So we basically were sitting there with recording their conversation. So we had one partner who was basically by himself, and he did what we would call a retrospective. He had no notes in front of him or anything. He was just recalling from memory. So in that case, there was a little bit more intervention with Miklos and I because he wanted to make sure he was doing what we expected. The other four verbal protocol analyses involved a partner and a manager. And essentially, each of the partners had been on the particular engagement for a period of time, and the manager that was assigned to the engagement was new. So they conducted the verbal protocol analysis as though they were having a planning meeting. So we were really trying to simulate the process that occurs when auditors are, or at least when senior level auditors are planning the audit engagement. Okay. Working with us on this, and I think I signed one of his papers for you to read on internal controls where they did verbal protocol analyses. Nelson.
Right.
Oh, you did?
Yes.
Biggs and Mock, right. Yeah. Yeah.
Yes, they
And,
read about it. Now they understand. Yes, they had the Biggs and Mock paper, yes.
right. And so that paper was on internal controls, right? And the difference between that verbal protocol analyses and what we're doing is that what Biggs and Mock did was present them with a very structured task, right? So they, not structured task, but they presented them with a case. So you were confined by information that was presented in that case. Our verbal protocol analysis, which to my knowledge is probably novel in the sense that we haven't seen this done in, at least not in the accounting literature, audit literature, is that we basically had a free-for-all. We didn't give them a case. We wanted them to tell us how they were making decisions based on a client that they selected. And so this is why we have so much in terms of what they spoke about. So that's why the transcript is even more labor intensive than you would normally see. And so based on that, based on the literature, what information we were interested in, so obviously we want to know how they structure the task. Um, what, what are the information acquisition operators? Are they reading it from a document? Are they recalling it from memory? Are they, making algebraic calculations? Then how are they processing that information? So did they generate an assumption? So did they assume that the client was going to move into a new market? Okay, because one of the clients was expanding into new markets. Did they assume that the client had no experience, or people in management who had no experience in foreign markets? Did they compare it? So example, did they compare it against other companies in the industry? Did they make a comparison as compared to what they did last year? Did they ask questions? So we saw, especially with the VPAs that involved a partner and a manager, we would see a lot of queries being generated because the manager was new to the engagement. And then did they make an evaluation? And the other thing is what the decision operators, as Abdullah started to explain, did they use some kind of judgment rule or decision rule? So for example, if they said, well, inherent risk was high and control risk was high, so therefore there's a greater chance for a risk material misstatement in the financial statements. What kind of audit decisions? Based on the information that they talked about, did they come to a conclusion about what the risk material misstatement was or what the audit risk was? So again, I don't want you to think, these operators are based on literature and based on information that we're trying to capture, how we want to organize the information.
So for example, this is basically, if you look at the Blackboard, you saw there was a folder that had the case, the codes, and a big folder with like 9 different code files. And then we also had a master coding file or document. So each of you are going to go into groups of 2 during the next week, and we'll assign you one of the documents, the coding documents. And each of you are going to go through the codes, and it looks like this. You've got the documents all separated out in the different thought phases.
Right, it's parts.
And you're going to assign one of these operators to each phrase. So for example, this one here, so how was Beth and Beyond responding to that? What do you think that belongs to? Is that a generating assumption, a premise? Is that a comparison? Is it generating a query? GQ, okay. So each of you is going, you're going to put a separate call for each of you.
And you're gonna do it, you're gonna do it independently. Yeah, you're not gonna do it together. So each one, what's gonna happen is basically this towards the end.
Right.
Each of you are gonna have like one column. You're gonna code it based on what you think the code is for this thought. Okay, and then your partner will do the same, and then you will sit together and go over any differences. So if, for example, see the first one like IRM, they're the same. Okay, we can agree that this can be an IRM. But if there's like SG and GA, and then you have to sit together and kind of decide which one of you is probably
What you're basing
discuss how you came up with the SG and how your partner came up with the GQ, and then kind of come up with a reconciliation for this thought.
It's very critical that each of you do it separately. So if you're doing like let's say the second file, let's say you guys are here in the front, Kristen, you guys are doing it separately together, and then you reconcile your results together, then you report, so you don't see what the other person's doing. Okay. Well, right now this is it's really judgment analysis. You have to sit there and think about what kind of phrases this is, like just to get rid of. Well, this is essential for research. I mean, any kind of research you do, information system requires acquisition of knowledge, whether it's domain knowledge or client knowledge.
Could you get someone who knows nothing about what you're planning to do and get them to put forth this, or is it somewhere where you have to tell them this is my objective and this is how I want you to do it?
Well, no, you
There's no
can't say
objective.
right.
No.
You want the code to be aligned to what your assumptions they're going to think about it in terms of the audit risk model. And then the firm that we use, they have a checklist. So they have a checklist. So if you consider these are partners, they've done this hundreds and hundreds of times. So there is going to be some consensus, and we see that. There's going to be some consensus about how, by the way in which they approach this, right? So it is.
Let me just go back. This is the Simon Newell original thing, and as you can't put worlds in different ways, you see how they think. Simon Newell suggested development of analysis, and what that more participants that they did was perfect the categories, etc., and operationalize what they were doing. But what they did, what we are doing different here, especially, is the fact that this is kind of a more of a free-for-all. This is a very realistic situation as opposed to just a control evaluation from the previous case that was the Ashton case. So that's is very different what we are doing here. And if we were lucky, and we can convince KPMG to do so, we actually want to sit in engagement plannings and capture that.
Right.
The entire audit team,
Yeah.
right?
They're trying to standardize some of their, more universal decisions they make as, in engagement teams down to the management level, from the senior partner down to the manager level, trying to standardize some of this or automate some of this decision making. They have a tool that they use currently as a beta version, which has sort of an expert system built in. They're trying to add this as another layer, possibly.
This is very interesting research. Now, for the AIS students, I know the accounting students would be interested on this, but there is a second stage that we could do with this, that is some automatic coding.
Right.
Before, like for example, the same sentence that you find 20 times, extract it, code it once. And there are other automation kind of things that you can do with this code, which is semantic understanding. And that's very good dissertation, very interesting work. If you can do, for example, Cheng is interested in text mining. This is kind of the next level of text mining. Kevin talked about here was good news, bad news, sentiment, etc. This is more like computer somewhat understanding a sentence. And so if anyone wants to pursue this to the next step, would be picking up these protocols, look, for example, how humans like you guys coded it, and see if you can create machine coding to it, like Vasu did in her dissertation for creating taxonomies. She tried to kind of do one more step.
So these are all the AIS students? This is going to be the AIS
Math
students?
and accounting.
Okay, so this is just an idea for
Another
research
great seminar.
that you may have.
Yeah.
But this is Simon and Newell, or operationalized. I have one question for you,
Mhm.
however, is what happens if we find some things that don't fall well in those categories? Are we allowed to create new categories?
Yeah, and no, well, kind of, because if you notice, when Ted put this together, one of the things he said is that we may need to expand it. So what will show up is that these, we can't agree, or the coders didn't feel like any category fits,
Yeah.
and then Ted and I will talk about it and try to figure out one.
You're going to tell them to highlight the things they can't code,
Right.
or to suggest a category, or what are you going to do?
I would highlight it.
Yeah.
Right.
The ones you absolutely cannot agree on, and there's nothing you can come as a reconciled agreement, then highlight that in yellow.
But based on what we've seen so far, everyone's been able to, the coders we've had so far, Abdullah, Denise, A2s.
Just so you guys have this assignment, actually.
Right. We've been able to, fit it in those categories. But we would say highlight, if you absolutely don't feel that any of those categories fit, then highlight it.
It's an excellent computer exercise if you want to do some kind of text mining understanding, would be looking at the coding, looking at what the uterances in the code, and see if you can predict coding of uterances that you didn't code. And that's very interesting because it's one more step in semantic understanding. Remember the translation thing that Google came out that actually works better than Kevin Passo's speech on this account was basically matching protocols of the Canadian Parliament and to the European Parliament and picking up sentences and say this is a method. So it was matching, wasn't really translation. And you know that what that was, I thought this was genius. People will figure that out because it was a total different approach than anything that people did in the literature. And what they did is brute force by computers. And you know it's okay to brute force if the results are good. And guys working with me in the Itaú project see those translations turn out to be pretty good. Correct?
Yeah.
They many of them don't even need me to translate anymore. You guys have been translating using Google, and it's not too bad, right? Sometimes it's bad, but sometimes very good.
So anyway, like what we plan to eventually do, for example, here is talk about the coding, like for line 41. So it's really interesting to see why the share price is changing, given that the revenue has not changed that much. We could run code or basic if-then rule with that statement right there. So the idea is eventually we'll be taking these utterances and declarations and building a knowledge system. We'll talk about that more next Friday at the
Yeah, we'll
seminar.
talk about that. Yeah.
But that's the idea behind this, is we're gathering knowledge. No one's ever had access to our audit partners at this level before, I believe, right?
Well,
That's very unique.
not discussing business, right?
Like just sitting there, like just discussing like their train of thought on these decision-making processes. This is very unique, a huge insight for us in the literature, and we could really contribute a lot to the decision-making process of auditors. And we could build a knowledge-based system, provide them some rules that they can put into their own system based on these interviews.
The objective that the firm has here is, because the risk assessment process, and we'll talk a little bit about this as I go into the JDM stuff, but the risk assessment process is extremely subjective. And so what they're and especially as when they talk about inherent risk. And so some of you have taken accounting, and some of your accounting students, so you know about perhaps you know about the audit risk model, which the standards basically says this is the auditor should approach the audit of a client's financial statements using a risk-based approach. And they use the audit risk model to do that. And the audit risk model has several components, of which inherent risk and control risk are two significant components in that model, because together those two assessments translate to the risk of material misstatement. So what's the susceptibility of this account to risk, a material misstatement, and then what controls are in place to effectively prevent or mitigate or detect that risk. And so based on that, the auditors determine the amount of testing, the nature, time, and extent of testing that they're going to do. So risk assessment is a huge component of the audit process. It happens in the beginning of the audit, and the firm wants to get it right. They don't want all of this variability. And you have the risk assessment process doesn't only happen at the partner and manager level. It happens when audit seniors are involved in that, which is what Michaelos was saying. We'd like to get in on an audit planning meeting and see the discussion and capture the discussion of the risk assessment there. But they also want their people to be aware of what are the components that go, how do they determine what's an inherent risk factor, and then how risky it is. How do they evaluate whether or not there are mitigating circumstances that would reduce that risk? So that's what the firm talked about, maybe a decision support system or a rules-based system eventually. So that's how we started to go down this path and try to capture more senior people, and we have very senior people going through this process because, and I'll talk about this a little later, experience and partners tend to have experience, obviously, but they also have expertise with respect to their clients. So they're going to be very well versed in the risk assessment process, more so than an audit staff person.
So basically, the objective of this whole assignment is to basically capture in real time how these partners are making the decisions about assessing the risk assessment, making risk assessment decisions on the engagement. And basically, we're trying to explicitly represent their mental models, their state of minds, their thought processes in this procedure, and then we're going to capture that information and translate it into, build that expertise into a system for their development. limitation of this particular methodology is the fact that people self-edit themselves to some degree. Some are more self-editors than others, so that's the only thing we don't really know. Like how introverted is one of the partners versus another one? Are they more extroverted, more comfortable expressing themselves this way or not?
It's a question of that, right? I mean, it's a question of, I mean, take a seminar, right? A seminar is like someone is speaking out, right?
Right.
But people ask questions because there's things they don't understand or whatever, right? So this would be like giving a lecture without any questions whatsoever.
Well, you talk to yourself? You ever talk to yourself?
But
When you're doing something?
but like, let's back up for a minute. But that's but no, but that's a valid. But right.
I mean, you talk to yourself. I mean, it's really like someone's. I mean, you're.
Right. But that's a valid concern, vertical, right? Because you can't, like, I don't know if you're not stating something, right? And that's why we wanted to have the interaction, because you're absolutely right. When there was a manager present, and especially in the four situations, the two managers were new to the engagement, right? So they so they had no prior knowledge except what they gathered through their own process of learning, gathering information about the client, understanding the business and industry and economic conditions and so forth. So there was more, you saw more queries being generated. So as a result, those verbal protocols were a lot richer and a lot more labor intensive, right? Because you did have the person there asking questions. But that is, your point is well taken. That is a valid concern, because you don't know if people are censoring themselves or they're just, not. But, well, yeah, you're right. Or they just don't address something.
We had a seminar recently where somebody responds to a question and said, well, I just took that as given.
Right.
My question would have been like the manager that considered the
Never report
Right. Right. Exactly. You're right.
I mean, the managers aren't really experts, though.
verbal modus analysis versus debriefing. Which one?
I'm sorry, say that again?
This method versus debriefing. Has there been research on which one works better?
I'm not familiar with it. I can't say there hasn't been. I don't know.
If anyone watches a World War II movie, at the end of every mission, the pilots
Have to debrief. Right.
debrief.
Right. That's interesting. I don't think I've ever seen that in accounting, in the auditing, but I'm going to go and search now.
I'm sure there must have been research.
There might. I mean, there might be.
Comparisons too.
Right. Yeah. I don't think I've ever seen it in auditing, but now I'm going to go and look. Yeah.
This is a subjective study. Everybody's going to be coding probably the same line. If we both code the same line, to be different.
No. Well, how we have it set up is that we have nine, right, and they're all different.
Yeah, but even the same line, if you give it to 18 other people, they're not totally going to agree on the same code.
Right.
Will that affect the study? Like, let's say the two people that are going to code the line, they're going to agree on something, but the other two, if they take the same line, they're going to agree on something else. Is that kind of like a?
That's the limitation, right? Because I can't have 100 people code, right? I mean, that's a limitation.
But actually, with the 18 students or 16 students doing the coding, it reduces some of that bias.
Right.
Because Bill and I were doing most of it before, and so those three first, sections probably have our biases built in them to some degree. Yeah. So better that we have all different coders now.
Yes.
I have a question on the setup of the experiment. So is the timing of when these partners set to do the experiment, does that coincide with the timing of the actual risk assessment?
No, because not in this case.
Audit year, or is it just like staged, like take a client you're familiar with?
Right, that's what we did.
Pretend we're doing a risk assessment.
Well, but how would you go about, right, go through the process, right?
Just at any given time.
Right. It wasn't, that's why we would like to actually see it in real time. I have no reason to believe that they would assess it differently because they assessed it after, like the difference might be Phil, one of the partners, did a retrospective. So, he's kind of, thinking about things, and maybe he's, now that he's thinking it's over with, he's thinking about it differently, or he's just, I don't know. Right, but the other four VPAs where they had the partner and the manager was new. So, the questions that they asked, and the way that the partner set it up was that they wanted the manager to come to say, okay, analyze these financial statements, the background data, and then, let's discuss, where do you see the risk? What are the assertions that you see as being most important? That was kind of how they approached it. So we kind of get, deal a little bit with the fact that it's not being done real time. But as Nicholas pointed out, we would love to be able to get access to while they're actually in because the way the audit planning meeting works is not just the audit partner, the manager. They might have a preliminary meeting, but the standard suggests this, that you have the entire team present when you're going through the risk assessment or the audit planning process, because everybody's bringing a different level of knowledge, right? Because as, for example, if I'm a staff person or a second year in charge, I'm going to be most familiar with the internal control environment because I'm getting stuck doing all of the testing of internal controls. Trust me, I've done it, it's no fun, right? So I'm getting stuck doing that. So I have a different perception or some information that I bring that, yeah, the partner knows, he kind of knows, okay, controls are here, they've been effective. So the whole point of the planning process is that you get together and discuss and you brainstorm so that you're able to identify more effectively, hopefully, where the risk is and what controls might be out there to mitigate that fraud risk assessment. Like the standards actually say, SAS 99, auditors should brainstorm. So the team should get together and brainstorm where fraud is likely to occur and then what controls or procedures in place to mitigate it.
Two more comments. First, this was actually the opportunity to actually be there was a mesmerizing experience. I learned so much about auditing and about how they think. It was really a pleasure. And one thing I'll ask you, however, is that there might be some little tidbits there that might be revealing of who the auditor was or what the issue. We need to keep confidence on this, keep it quiet.
Right. We tried to go out and eliminate all of that, but
Yeah, but there
it's,
might be
yeah.
little pieces there.
References to competitors, that type of thing.
We had an idea, I still have the idea of using some of these entities to eventually develop an expert system for doing audit, for this kind of risk assessment in audit. And that was kind of the remote idea behind this, although this is a very difficult project. And we think that across the industries and across situations, that we might be a very wide variety of considerations in audit. It was their idea to bring in the manager and having the dialogue. And it was a very good idea.
Yeah, it was.
Yeah.
Nancy, I think, was. Nancy or
It was
Rich.
very, very good. And they would love to have something, maybe not to do the risk assessment, but basically to gauge the risk assessment, see if it was far-fetched or was forgetting something. The other thing I think that the risk assessment will be, if we do a tool, there'll be a questionnaire in the beginning asking a whole set of things. And I'm kind of afraid that that questionnaire would be extremely large and extremely cumbersome. So we would have to think about other ways methodologically to maybe answer those questions. But this is one of the most interesting kind of peeks I had into the profession ever. It was just really interesting. And I mentioned 3 or 4 times in these meetings that I would love to have a case like this that I could give to the students. But they didn't volunteer, say you can use this.
Okay, so basically, yes.
There are 2 tables in front of mine.
Yes, you only use this one here, okay? You're not the second page. This is the first page. Okay?
Yeah, I think, did we only look?
I only uploaded this one, so you don't know I
Right.
filed including the
Oh, really? Okay, well, let's use this first, what you see here on the slide.
Okay, so we'll just
Yeah.
upload
Right.
another one. That's all.
And so basically, if you could get back to me before the class today as to who your groups are, so we only want groups of 2. Okay, work with your friend, and then we'll post in Blackboard which
Assignment for each
assignment
group,
you'll have
per
as a
group.
Make sure you each independently first code it, okay, before you combine your results and try to reconcile it, because otherwise it doesn't work.
So, and here's the point. There's no right answer. This is judgment, which is why we're doing this, right? So this is judgment, which is, very indicative of the risk assessment process. There's a lot of judgment that goes into it.
And this is not the first assignment of this project. We have more cases coming up next following week. So
Yeah, 2 more interviews.
right, 2 more interviews. And since we don't have any assignments in this class, we figured this would be a good real life exercise for you guys to get a handle on in terms of what it's like to gather knowledge for these accounting information system projects. So this is, I'm sorry?
So once the coding is done, then I'm going to summarize these operators, look at it, analyze it across the different verbal protocols, see how, then fit that, what they're doing in with the literature. And basically, I shouldn't say I'm going to do, Ted and I are going to analyze the codings. And then eventually we're, well, we're going to get an understanding of the auditors, how they're assessing risk, what factors, how they structure the information. So we're looking to obviously produce a research paper on this.
No, but I mean, do you expect to see commonality across these 5 people? Or?
Yeah, just based on sitting there, because I sat through all of them, there's commonality. And a big reason for that commonality is because you are constrained. I mean, the audit risk model is very direct, right, in telling you what we're hoping to see, what kind of inherent risk factors what I'm hoping to come out. Can I see, get a better understanding of what inherent risk factors are more.
But is that commonality a good thing or a bad thing?
Yeah, I mean, well, I don't.
They talked about having women directors because women directors bring a different perspective, right, to the board, right? So, I don't know whether, then you might say, why did you have all these audit failures? Because it's just sort of group thing, right? Nobody thinks outside the box.
Well, but this is the way I would answer that. It's I think it would not necessarily be good because in these VPAs we have very different industries. We have I think all of them are public except one. So there's certainly, when you're looking at factors for a public company versus a non-public company, there should be differences. So we should see differences there. But more importantly is how are they arriving at the final risk assessment? And I think there is going to be some commonality, one because of the audit risk model, but also because they have a checklist. Now, there were times that they referred to that checklist, as certainly what the managers told us was as they were going through gathering information and trying to develop their understanding of the client, they referred to that checklist. And so a lot of their questions and queries were based on what, as a result of them referring to that checklist. Now, we've had, just in the discussions with the partners, different takes on how extensively they use that checklist. Some use it like a Bible, and others were like, yeah, we know about the checklist, we kind of, right? And so that checklist is not working for the firm because people are not, and that's one of the challenges, the audit research we found, because there's always checklists. I mean, auditors love checklists. And because from a firm perspective, it's a way to get people to kind of align and approach problems the way that the firm wants them to approach it. But the research has shown that auditors, either they just kind of do a check the box, and they're not really attending to the information or acquiring the information in the way that the firm wants them to, or they lean on it as a crutch, right? And so they're not thinking outside of the box. So if something unusual happens and it doesn't really fit into this checklist, then now they resort to these heuristics, which sometimes lead to inappropriate judgments or less efficient and effective judgments. So I think there will be variability just because different industries, and also because not everyone uses the checklist in the same way. Like one of the VPAs, the partner was kind of real laid back, he gave good information, but he didn't give a lot of information. So imagine if you're a brand new manager in that engagement and you have a partner who's gives a lot of information, even answers questions you didn't even ask. Well, that's more information. So if you have more useful information, I think that's going to help you down the road with the audit. Versus the other partner, he didn't do anything wrong. He just wasn't as, he didn't anticipate questions, or he didn't say, okay, well, you didn't think about this, let me offer that. That was, and I think that wasn't because he was trying to hide it. I just think that was his style, communication style.
Whether the output of this is a subject matter thing, as in this is how, these are the facts that you should look at, and you should process them in this way in order to get a risk assessment, or is it something generic about how you think?
It's about audit, how auditors think, and there is the next stage for this. Once the risk identified, they decide on procedures, and the procedures, we really didn't go into that.
Right, we didn't get to the procedures.
Because, like somebody says, here's a checklist, I went through all the checklists. That's the verbal analysis, right? Another person says, well, I hired the manager, I could tell he was a crook, right? Both may be perfectly valid ways of assessing risk. I just hope I understand how this methodology captures that difference, or what does it do?
Well, I think because I think those things come out, right? Even with beyond those things will come out. Like I did a verbal protocol analysis when I was doing my dissertation. A much smaller set. I sat there, but I had them do a case. I was doing a negotiation study, and they did a case. And the kinds of things that comes out, that had nothing to do with the case, and they, one partner was like, okay, so I had a simulated client, and the simulation the client was very contending, so they didn't want to budge. They wanted to book what they wanted to book, and they wouldn't listen to reason. And so based on that, I had some partners who just some partners capitulated and gave in. Or not just gave in, but didn't really resist as much. But then I had another partner who started recalling things that had nothing to do with the case. So he was starting to bring in his own prior experiences dealing with, very difficult clients in situations like this. So the thing is that the good thing about verbal protocol analysis is that you can sometimes, depending on how forthcoming, and that's the drawback, but then depending on how forthcoming that person is, you'll get information that is not even in a case. And what we're doing, we don't even have a case. So I think we'll get a richer set of data set. Hopefully, I think we did based just sitting there and listening to it.
Very educational.
So that is an example of research and auditing.
So whenever you see people talk about verbal protocol analysis, you'll have a
Vivid.
hands-on understanding why that's not a very popular method of research in general.
Yeah.
Because if you can imagine, you're going to be probably tired of doing 150, 200 lines. You can imagine doing 2,000 lines.
Next week, I think we're gonna.
It'd be larger assignments
Yeah,
next
we're
week.
gonna give you kind of a step behind. You're not gonna start from the coding bit. You're gonna start from actual proofreading, parsing it.
Right.
Get experience.
So have hands-on experience in all aspects of this analysis process.
Right, but there's a method to the madness too, right? I mean, so I'm going to talk to you today and next week about judgment and decision-making research and auditing specifically, because that's what I focus on. And so you'll get to see. I mean, this is probably one of the more difficult judgment tasks that auditors have, and so much rests on how effectively they assess risk, right? Because as I said, the audit risk model really drives the nature, timing, and extent of the audit procedures that they're going to perform. And if they don't get the risk assessment right, basically they could, if they don't assess the risk of material misstatement correctly, or they miss something because they haven't focused on the right inherent risk, or they made the wrong decisions regarding the amount of reliance that they can place on internal controls, then you increase the risk that they will issue an incorrect statement increases, right? And we know what happens when auditors, when we have a blown audit opinion, right? We see.
I think all of them were all continuing engagements. Yeah, we didn't get. It would be good to get a new engagement.
So they can't work from memory on the new engagement.
No,
We
new
actually,
as in a new client.
No, it's a continuing. These were all continuing clients. Yeah.
Because isn't there a danger that these people are I mean, that you don't want to lose the client, right? So you set the risk in such a way that you keep the client.
Well, yeah. Right. That I mean, that, but yeah, that's the whole incentive story, right, around auditors.
But the PCOB
But-
goes back and said they didn't conduct.
Right, but that's the other thing too. That's what we did. What you're seeing now is auditors are actually, just listening to some of them talk. They are. I don't want to say they're afraid of the PCOB, but they're so frustrated by the PCOB because they don't. This now. As a compared to the past, prior to the Enron and WorldCom and all of those audit failures, the auditing firms basically policed themselves, right? They regulated themselves, and now after SOX, you have the PCOB. So they always have somebody in looking over their shoulder. And, the PCOB is, the regulatory arm for the auditing profession. And so they are very frustrated by some of the deficiencies that the PCOB is, that they're being cited for. They feel hamstrung by the types of audit procedures they can perform. Like Phil talked a lot about the fact that they want to move forward with data analytics, but a part of them is like, well, look, the statistical sampling is what the PCOB knows, and they're going to sign off on that, so we're just going to do that. So.
Yeah, they're afraid the PCOB may not be approved or get a stamp on that process.
Right.
They use more advanced analytics or other processes. Some of the firms have beta versions of more sophisticated machine learning type algorithms and experts put in place, but they can't use them in the engagement because of this fear of PCOB not authorizing it or not really approving
Or not accepting it as audit evidence, effective. Right, and also the PCOB's approach to auditing firms, obviously the size matters, and so all of the big four firms are going to be audited on a consistent basis. But in terms of choosing the engagements that they audit, they look at a risk-based approach. So they take a risk-based approach to selecting the clients to be viewed. So,
Can I ask a more general question
Mhm.
with risk-based models? Do they assess risk as if they're starting from scratch with a continuing engagement, or do they sort of say, let's update it from last year?
So.
But the model then assumes that it's from scratch, right? I mean, it doesn't cover anything
Well,
from prior years or anything.
No. I wouldn't say where you capture that. Right. Where you capture it, what you're talking about is in an inherent risk, right? Because so one of the factors that you look at with inherent risk is, is this a client where we've had a history of significant audit adjustments? If we have, what accounts have they been in? Is it a new engagement or a prior year engagement, so that we know management? So the inherent risk would pick up your assessment of the inherent risk factors should pick up what you're referring to.
Changes year by year. I mean, I never quite understood this. Like, does the audit fee change year by year based upon risk premiums, or does the amount of hours they work change year by year? I mean,
ask that Tiffany about how the audit fee changes
does
based
it?
on
No, I never heard anyone explain that. Because according to the audit risk model, every year you should look at it from scratch and say, look, this year the economy is bad, we should charge more because of.
But the reality, right, Michael, is not going to work that way, right? Right, because a client is going to push back, right? And also remember that, there was work done on, audit pricing, and what they found is that auditors in the first year, they're probably going to lowball, right? Because they want that client. So they figure they can ramp it up and get that over, keep the client, and they'll make up for the fees in later years because they expect to continue to collect rents from that client. I would say that the audit risk model is, and I don't know, I don't think it's as significant in terms of determining fees as other economic factors.
That's the really interesting research question, right? Which is, if the audit practices are really constrained, you cannot consider it like a zero-based budget.
Mhm.
It's really based on, if you did it last year, they're not going to let you double it this year.
Right.
Or if you had
Right.
1,000 hours, they're not going to
Right.
allowed.
Right.
So then how does that transform the audit risk model? I mean, what is it that changes, assuming that you say you do find there's 10% more risk, right? But you can't charge 10% more, right? Or you can't have 10% more hours. So then what do you do? I mean, what's the evidence?
Right, well, that's your right. So so the audit risk. So if you find that your risk is increased, right? So it's either it's going to have increased because of inherent factors, like now you're the economy's bad, or right, but or accounting changes, right? So if you have to be able to go back to the client and say, well, now we're going to have to spend more time because this account is now riskier. So I think it would be harder to say, oh, the economy changed, so now I need to charge you more money, versus because the economy changed, you cut back on, you let people go. So now internal control risk is increased because we've had so much turnover, people are not familiar with it. And because of that, we can't rely on internal controls to the extent that we did before.
Is there evidence of this? Is there empirical evidence that this happens?
Oh.
In the oil industry right now. For
Well, I don't know.
I think it's a very interesting research.
Yeah.
Captain suggests the audit fees are counter-cyclical.
Yeah. So Tiffany, what are you working on with audit fees?
Tiffany, Freddie, and Newey.
Are audit fees counter-cyclical? I suspect
They
that
are looking at the issue.
What are you guys working on?
Yeah, we read you the title of the paper.
Yeah.
The impact of non-timely 10Q filings and audit quality and audit fees.
That sounds very pertinent to the conversation.
It is pertinent because it.
Yeah, she said it does.
Fees.
Yeah.
Yeah.
What the factors that
Yeah.
affect the fees.
Exactly,
Do
yeah.
you know if audit fees are cyclical or
What did
counter-cyclical?
you find out, Tiffany?
I don't think anyone exactly. They know. The reason I ask this because the literature here is very good. Literature review. I don't know the literature the way they do it,
I
but
think you should do that. I think that would be very interesting if it hasn't been done. It's a very interesting question, given what
Yeah.
Mm-hmm.
that's said, right? Is it cyclical? Or you should be
should be
counter-cyclical.
counter-cyclical.
But how do you persuade a company
Right.
difficulty
I know.
to pay more?
Pay more, and especially because clients push back. I mean,
Yeah.
clients really do push back, and especially if they're having.
You go to a shoe
Yeah.
store and say you're asking me too much money for this shoe, I'm willing to pay this. And you know that if you don't sell the shoe the way he wants it, he's going to go next door and buy the shoe.
Right.
Right.
Don't KPMG doesn't do it, EY will do it.
Exactly. They're probably
But there's a cost too of auditor switching.
Right.
There's a cost of audit. There's a big switch cost. So.
But there's a cost of making the wrong audit opinion, though, and then they get sued by the shareholders, whatever. It could be there's big pocket theory, right?
So, and I get, will auditors, in the face of having pressure on their fees, will they, reduce audit effort or just eat it? Because audit firms are a business, right? They're trying to make money.
Well, they've cut back a lot of associates. They've cut back their costs by, sending out a lot of work to India, for example, some of the more manual processes. So,
But see, the point is that goes back to how you interpret your global protocol analysis, right? If these very senior partners know that there is no way they can increase their audit fees, right? Then, what is the point of doing a thorough analysis and coming up with saying it's 10% more when you know you can't do anything about it, right? So then you might decide that the best course of action is to just fit the risk to the price, work backwards, so to speak. Right?
This basically leads to the procedures they are going to apply. I don't think at that stage they are actively thinking of pricing.
Well, no, because by this time they've already decided on
yeah,
price.
they've already accepted engagement.
Right. They've already decided on price.
This is where I went to go ask, what's his name, Mike Cohen. Now I remember the question. Who went with me there asking Mike Cohen? You went? We went to ask him exactly if the fee is established before or after the risk assessment, before or after the contract. And it has to be before the contract because the contract has a price in it.
But there's different types of risk assessments, right? So there is some risk assessment that happens before the fee, right? Oh, especially if it's a new client, right? Because you're going to try to understand, wait a minute, do I even want to take on this client? How risky is this client in terms of, litigation risk for me and management integrity, that kind of stuff. So there is some level of risk assessment that you are going to do before the audit fee is set, before you even, especially with new clients, before you propose on an audit. because that's going to help you
But in
determine.
this case, if the price is already set,
But it's already set.
then
Well, it's renegotiated every year.
no,
Right.
it's already set for this year. Right?
Yeah,
Right.
but yeah,
So then, what's the outcome of this?
The outcome of this
this is your audit.
assessing what it is to drive the procedures you are going to do. That's what it is. And this is very important.
But you can't pass the cost on at that point.
Yes, you can. Let's say let's say, for example, if the client, because when you set your fees and you're setting your fees, and let's say it's a continuing engagement. Now, whether you're successful, but you can certainly go back to the client and say, okay, based on when we planned this audit in our initial conversations, we were under the impression that this was going to happen. So always there's some language in your fee, in your engagement letter, that gives you an out. Now, whether realistically, Michael, whether you run to the audit committee and say, look, we ran into this. Or if you find fraud, for example, immediately you have to extend your testing, right? That you can go back and try to collect those fees from the client.
These are the kind of things you would imagine people have written papers on, right? Because that would be very interesting.
Yeah, there's a line of research on audit fees.
No, on this additions contract.
Oh, you mean too about the engagement letter?
No,
What?
like what you just said.
Mhm.
After you sign the contract, then you go back and you say, I want 1,000, 100,000 more.
This is not disclosed. The disclosures of financial statement is the audit fee that was charged.
Charge, right? Not whether it was
not
renegotiated.
original audit.
Exactly.
Yeah, that's hard. And it's only recent that we even had audit fees disclosed.
So then talk about other departments
Except for
that maybe-
communities in North Carolina and Australia.
Yeah.
Right.
Disclosed before. They are very touchy about doing this, including TV.
Yeah, 'cause
No,
their
but it's
competitors
surprising
know
that given they've authorized the fees being released, they won't release the even more important information, which is for the fees change during the year. Because that would be very valuable information, right? But that will tell you whether the audit has found things they didn't expect.
Right, but they wouldn't want that information released too. The client wouldn't want that information.
Regulators can decide whatever they want, right?
They wouldn't, this is like my typical question. Do you like to be graded? No one likes to be graded. They are not going to volunteer any information that they are not forced. And the PCOB has to choose what they battle about disclosing. But I think just kind of a little bit of the context here. The context of this is to understand better that little step of risk assessment